Hey, what's up, everybody, guys? It's Clint Coons here. And in this episode, what I want to do is introduce you to someone that I've been following. I was just really impressed with his life story. This individual had 87 doors, get this, by the time he was 24. And he didn't do it with his own credit or his own money. This individual that we're going to be bringing on today is Daniel Kwak. He's got a great YouTube channel, a huge following. He talks all about various real estate investing strategies that you can use to implement in growing your own portfolio or about financial aspects of investing. So it's a real treat to have him on because he's going to share with you some of the strategies that he's currently using, that he's used in the past to put him where he is today. Daniel, thanks for coming on.
Thanks, man. I really appreciate this. It's an honor.
Excellent. All right, so your story is so compelling, to be a 23-year-old and go out there, as you were telling me, and start investing and realize this is a tough nut to crack if you don't have a great credit score and a big, thick wallet. So how did it all work for you? How did you get this thing going?
Yeah. So, to your point, I'll kind of just paint the picture of where I was, right? So, my family and I, we actually immigrated to the United States when I was 5 years old. It was 1999. Which, on a side note, I was a huge basketball fan in South Korea, and when we flew to to Chicago and O'Hare, literally the first person I saw on TV was Michael Jordan. And I was like, "Ooh, this place is kind of cool, right?" But nevertheless, I still remember we were at Domino's. We waited 45 minutes because I had won a reading competition that got me a free pizza that was probably the size of a Samsung Galaxy 20, right? And I still remember our family like waiting 45 minutes, and my dad actually used a pair of scissors to cut the pizza into four different pieces, and that was our dinner that night. And so, many nights of us sleeping in the car because we couldn't afford to pay the heating bill. And I actually remember we were in the park one time, and I saw my mom picking up different plants and weeds, and I saw that on the dinner table 2 hours later. So life was definitely interesting. But when you're a kid, you don't think that you're poor. You think everyone kind of just lives this way. But I will say the genesis of why I do what I do today, why I get out of bed in the morning, why I will still to this day read real estate books, just looking to learn new things and looking to experiment and looking to constantly expand and grow. I remember when I was 6 years old, and ever since I was a kid, I always had a tough time sleeping. And it was like about 1:30 a.m. in the morning. I looked out, and I saw we lived next to, let's call it, a gentleman's entertainment center, right? Let's call it that. And I saw this man who was probably about in his mid 40s. He was stumbling out, and he was clearly intoxicated. He had a really nice shiny watch on. I still remember the street lights bouncing light off of his really fancy watch. And he wore a suit that was probably costing maybe between $3,000 to $4,000. And he got in the car. I don't remember the exact brand, but I remember it did have a big L in it, right? So it was a super nice car. He's driving away, and of course he's swerving. And I looked over 90 degrees to my left, and I see my parents sharing a twin bed in a room that doubled as our dining room table, as our kitchen, and as our living room, and also as my parents' bedroom. So the question that I asked myself was, man, what would it look like if my parents had the ability to produce the resources that guy who was stumbling out of the gentleman's entertainment center had, or vice versa? Like, what would it look like if the guy who was stumbling out at 1:30 in the morning had the heart that my parents did? Because my dad was the type of man where he would give the shirt off his back even if it was his last shirt. So that's what inspired me to want to do something big, right? So I'm a faith-driven guy. I tell people all the time that you can't serve a God that's so big and dream so small at the same time. So at 17, I read an article by Forbes magazine saying that out of the top 1% of people in the world, about 76% of those people earned their money by investing in real estate. And so I said, man, like that's what I got to get into. Except the only problem was I had no money, as you said, right? I had no credit, no money, no nothing. Actually, a commercial lender at one point laughed at me when I was 22 years old, and I told them I wanted to get into buying apartment buildings. And this was after I told them my DTI, my credits and all these things. And when I first started learning about real estate at 18, I had negative $187.65 in my bank account. I still remember seeing a two credit card max balance that was maxed out. And then, I still remember that night where I dug through the dumpster looking for my dinner. So, it was really interesting time. And so you see that kid and going, wow, that okay, so that kid's gonna invest in real estate. Yeah, okay, right? Like let's see about that. And then I learned this really interesting concept that there's actually four currencies in the world. There's time, there's money, there's knowledge, and there's relationships. And although I didn't have the money portion, what I did have was time, and I had the ability to receive and gather knowledge and also gather relationships and network. And I had this core belief, this conviction that I could use time, knowledge, and relationships to create something for myself, to create something huge and fantastic. And that's kind of what sparked the information and the inspiration journey aspect of what I did, of the blueprint.
So when you went out and you started finding properties, I mean, we're talking about this and we're comparing stories. Tell everyone about how you approach the acquisition side. That how did you start contacting sellers, finding deals that were available? Because I think that really helps people that feel in this market, and particularly right now, you're stuck. I mean, we always talk about you don't go to the MLS, right? I've heard you talk about Prop Stream before. It's a great service that people can utilize. But even then, when you use PropStream, a lot of times you call them up and you've already lost those deals. They've already been sold. So explain what you did.
Yeah. So, I tell people all the time, markets may change, but people never don't. The great real estate investors I know, not the good ones, but the great ones, they always view every single deal through the lens of what problems can I solve. And whether it's 2008, 9, or 2022, or 2024, there will always be people with real estate related problems. So for me, the harsh reality and the philosophy I developed very early on that eventually trajected and catapulted me towards having a set of strategies that I use to gather deals where nobody has access to. That philosophy, that catapult was you never look for properties, you always look for people. Because if you're always talking about problem solving, and if that's the genesis and the mentality of how we actually build a real estate career and an organization, well, we got to look for people. The properties just happen to be the asset that's exchanged, but really the business is between two people. It's between a buyer and a seller. Buyer has a set of needs and desires to fulfill for his or her investors. And then the seller has the same obligation, but they just have a set of problems that they need to be solved. So that's the question I started asking myself is, well, how do I find the best people? And so I looked at what my product was. And so I said, well, if at the end of the day, real estate is just like business, right? I have my marketing, which ultimately is supporting my sales, and then my sales, which eventually promote and the close, right, in my offer. So if I'm reverse engineering and I'm asking myself, man, how do I find good deals? Well, I got to know what it means for me. What does that mean to have a good deal? And for me, my product at the time was multifamily buy and hold, and it still is, right? It's apartment complex buy and hold. And it's funny because when people ask me like, Daniel, how do you raise capital? How are you such a good salesperson? And the reality is I'm not. I'm not a good salesperson, but I just am very good at creating a situation where people want to buy. So even with my investors today, and even back then, like one of the things I used to do is I had an irresistible offer. I tell everybody you need to have an irresistible offer, and I used to give investors 100% of all the depreciation, and like there's a lot of other things that I did that really incentivized investors. But in regards to finding deals, I looked at my product. Okay, it was an apartment complex buy and hold, but another aspect of that product was seller financing. And so for me, I couldn't get bank financing deals, not only because of my age, my lack of experience, but also my finances. They just weren't in the best situation, right? And so I started asking myself, okay, if I have to buy property seller financing, how can I create a win-win? Because remember, it's about people, right? How can I create a win-win for the other person on the other end of the table, right? And so I spent about a week researching all the benefits that seller financing offers to the seller. And I got about a list of about 6 to 10. And I actually got it down to 3, right? So I compiled everything, all the lists, made a list as big as possible. And I took the best 3 because psychologically speaking, I think the human brain actually averages out the top 3 as opposed to, the whole list. And so those 3 were, potential tax benefits. Number 2 was making money as the bank, which of course the banks are currently the richest entities in the world. So between the potential tax deference, you make money as a bank by making interest, of course, and all that interest is front loaded. All that profit is front loaded because of the amortization. And then last but
Mhm.
not least is the ability to still be involved with the real estate industry, but have passive income. Because for me, it's never about the geographics or the demographics. It's always about the psychographics of who I'm working with. Whether that's an investor or a seller, I want to know how people think. And I'm obsessed with that. I want to know what helps them go to sleep at night. I want to know what makes them get up in the morning. Because at the end of the day, my personal vision is to have is provide people a peace of mind, right? So even for all our companies that my brother and I own, at the end of the day, is to provide people with a financial peace of mind. So those were the top three things, and then those were the benefits of the sellers. And then the question I asked myself then was, well, who resonates with these benefits? Like who are the sellers and the landlords that really resonate with potential tax deference, with making money, having their money make money for them, and then also continuing to receive passive income. And after a lot of great conversations with my mentors and with myself and just a lot of research, I found out that I'm going to be very careful. Seasoned landlords were the best people to target, because these were individuals who own properties for more than 27 and a half years. They've had so much, and the depreciation recapture at closing is going to be quite interesting for them, right? But on
Well, hold
top
on, hold on. You wanted to be nice about it. I'll just say it. He's saying look for old people.
hey man,
That's
you
who you're
said it,
looking
not
for,
me.
right?
That's
Old
right.
people like me. Well, maybe a little older than me, like my
Right.
father. My
'Cause
father's
you're not, I don't think you're
76.
an old guy.
Yeah, but my mom's always she's like, "You
Yeah.
need to get rid of these properties because you're always out there, you're working on them, and they're a hassle." And I'm keep telling my dad, "Don't worry about it. I'll take them over, Dad. I'll just give you the income and I'll
That's
manage
right.
them and run them for you." But you're right. That's the mindset. It's the older generation that
Yes.
wants out. Sorry,
And
I cut you off.
it's the psychographics, because
Yeah.
even to your point, Clint, like 90% of all these older landlords, always 90% of the time, they had a wife who was like, when are you going to sell those properties? When are you going to get out of the game? When are we going to be
Mhm.
able to travel? And it just always made me chuckle, because I used to always have great banter with those individuals. And I used to, I made little jokes here, like, don't worry, Mrs. Johnson, I got I'll make sure your husband sells me those properties.
You target the wife because she'll make the husband do what
That's
you want
right.
done.
That's
Yeah.
right. That's right. And so, I targeted older landlords. This is exactly
Mhm.
what I did. And so the next question, of course, I asked was, well, for me, what are the best ways to find those people? Because obviously, conventional mainstream wisdom in the world of real estate investing is for everyone to do direct mail campaigns and, hey, go on Zillow or, use a wholesaler, right? And for me, when I look at the individuals that I was targeting, I saw a different set of channels of being able to find properties. So, one of the things I did, and I know you and I were talking about this off the air, but it was building relationships with property managers who were 25 years in the industry. Because I knew that those guys had a group of their buddies who also owned properties for, 25, 30, 40 years. And so I started reaching out to property managers, and I decided to create a little arrangement between myself and them. So I went up to them. I said, hey, what's the minimum number of units you have to manage in order for your office to stay afloat? And I would target these property managers that had between 100 to about 600 units under management. And they would always give me a different answer, right? It's like, oh, I need at least 175. I need at least 187. I need at least 196. And I asked them, like, well, how would you like to have a situation where you never go below the number you're at right now for management? And they're like, go on, right? I'm listening. And I would say, well, next time you have a client that wants to sell, have them call me first, because I've got investors I've raised capital with. I've got this. I'm looking for properties in your area. Have them call me, and I'll keep you as the property manager. And worst case scenario, if you and I don't work out, if I don't think that you're that great of a manager, you can make your commission by being the broker. And so they love that idea, because for them it was such a win-win scenario, right? I was creating situations where people wanted to buy, not situations where I had to completely sell them, right?
Mhm.
And so that was one. I think I got 64 units off of that strategy of building relationships with property managers. And then the second one was actually calling for rent signs. So again, it goes back to the psychographics, right? Because I said, well, older landlords probably aren't going to utilize technology like apartments.com or or Zillow. I'm sure a lot of them do, but for the most part, older landlords don't really utilize a lot of technology. So one of the things I used to do was for 3 hours on a Saturday morning, I would drive around the neighborhoods that had a lot of multifamily apartments of what I was looking for, my avatar. And sure enough, either A, they had a for rent sign out, or B, the landlord would actually be in the premise working on the property. And and to my because of my research, because of my setup that I've done, probably about every 3 out of 4 people that I either called or met while I was there, were probably 65 and older, and so that was a great way that I found properties. I actually did a couple deals through that. And last but not least, I used to look at newspaper ads. So if you go on the newspaper, I would see these for rent ads that were there. And again, same thing. Sure enough, a lot of these guys would be 65, 70 or older. So I think my tactic of looking for people, not properties, just really paid off for me because it allowed me to be efficient with my time and serve the people that I was looking to serve.
Yeah, I got an acronym for you. So here's your strategy. It's called BOLD, buying older landlord deal. There
I
you
love
go.
it, man. I love it.
So the thing about that, what I like is that not only finding the older landlord, many times I would look at them to see what properties they own. The older the properties are going to be, the better
Yes.
because they're having to put in more maintenance time, which makes their life more difficult. So if you can find someone that's older that has maybe 15 properties, maybe it's not a multifamily deal. I hadn't thought about that. That's even better
Yeah.
because they have several apartments that they're having to manage. You can get in there and talk to them like you did. So how did that conversation work? When you approached them,
Yeah.
typically, what was it like?
Yeah, so Clinton, I'll be honest, there was a barrier, right? Because
Hmm.
they saw me, they saw a guy who was a third of their age. At the time I was
Yeah.
23 when I was buying an apartment a month at that point, and they just kind of saw this kid, and so the sales aspect was fairly difficult, and especially with the seller financing conversation. One of my biggest obstacles was, hey, like, can I trust you? you know and it actually all started because these sellers started asking for like 40-50% down, and I started asking myself why, like, why were they so stuck on getting a bigger down payment. And one day I just got so frustrated. I was like, and I think the landlord I was talking to, his name was Mark. But I was like, Mark, is it possible? Or was like, Mark, if you don't mind me asking, are you asking for a larger down payment because you want me to have more skin in the game because you don't really trust my ability to run this property? And Mark, he was a very direct guy. He's like, yeah, like I'm worried that you're gonna run this thing to the ground, and I'm gonna get the property back 4 or 5 years later, and I'm gonna have to end up putting hundreds of thousands of dollars to fix it up, right? And so that was great because whenever you are negotiating with the seller and you identify the real reason why they're doing something,
Yep.
that's always a bonus. Because for me, at the end of the day, like, again, I always care about the psychographics of what that person's thinking. So I said, well, Mark, would it be fair? Would it help ease your mind if every 2 years or every year or every 3 years, whatever you decide, I was subject to an inspection? And you and I split the inspection cost. You can pick the inspectors, obviously, as long as it's not somebody who's extremely biased. And I'm subject to an inspection every 2 years, and there's a certain standard that I have to uphold, because my strategy is actually to fix up the property a little bit and raise the rent. Because that was a very primary strategy of mine, was obviously the value add, even back in 2017.
Yep.
And I'll be honest with you, I think is a great transition to the conversation. Back in 2017, I thought the market was going to crash in 2020. That's what I thought. I thought the housing market and the stock market was going to completely crash in 2020 because I was telling myself and a couple other friends of mine, like, there's no way that these 10-year treasuries that were issued in 2010 are going to be able to be paid back. Like, there's just no way. Like, something has to happen. Either has to be historically speaking, there's either usually a war, a big market correction, or a pandemic. Which, look at that, right? But when I had when I had conversations with these sellers, that's one of the addendums that I used to offer in the contract with the contract for deed. It was, hey, every 2 years I'm subject to an inspection. And I actually found out that these guys like actually preferred a 5% down payment or 10% down payment because it meant that their money was going to accrue more interest, right, which is more profit for them, And not only that, but their monthly payment was going to be bigger, meaning that they could, go to Italy if they
Hmm.
wanted to, move down to Texas, do whatever they wanted. And so I've actually done a couple deals where I put no money down, like whatsoever, which was pretty neat, I gotta say.
Yeah, I mean, another way to do it too, if you weren't looking for an apartment building, but let's say you found someone that has 15 homes
Yeah,
and you want to buy all 15 and they're unwilling to sell you all 15. What we've done before is said, all right, sell us this many properties, give us an option to buy the remaining, and we'll record that option against the properties. And so if this doesn't work out here, what we're telling you is going to work out, then you're not going to sell me these other deals. So there's different ways to put this together to give the seller some confidence that if it's a try and buy, right? Is this
that's right.
person really going to be able to live up to what they're telling me? So you got to be creative.
Yeah.
That's smart.
Yeah, and obviously I mentioned this before, but it just for me it all went back to how can I provide a better peace of mind for this individual, because everyone's motivated and they feel safe. Their risk is mitigated in different ways. So I love that. I love buying a portion and then doing an option contract on that. I'm gonna steal that if you don't mind.
Yeah, we did that one. It was going to be on a 220 property portfolio. We ended up going through with it. We ended up buying down in Houston. This was a few years back in
Yeah.
2000 and actually I think 2018. And I don't know, I look back on it, we would have had a lot of cash flow, but the Houston properties, the package we bought down there, they've all tripled since then.
Yeah,
So,
I was gonna say.
yeah, that's right.
That's
So,
awesome, man. Well, thank you for that. I mean, look, I'm here to learn too, man. I know I'm the guest, but I'm looking to learn every minute of the day. So
yeah, I mean, investing is so fun. So you got this force strategy.
yes, sir.
So tell me a little bit about that.
Yeah. So fun. The way that we even came up with the name was the first movie my brother and I watched when we first came to the United States was Star Wars Episode One: The Phantom Menace.
Hmm.
And so we were always big Star Wars fans. So really, force stands for you find the property, you own or finance it, you raise the capital, cash flow, and then you cash flow it, which it's about management. And E is expanding your empire. One of the things I noticed a lot with real estate investors is they're really good at doing deals. They don't know how to build a business. Which with my years of traveling and teaching and training real estate entrepreneurs, and even for me as a real estate investing coach that helps people accumulate a rental property, I mean that's one of the most number one common obstacles or common mistakes that I see a lot of people make. I've got a friend of mine who's a pretty well known real estate figure. I won't say his name, but I'll say he's got a great beard, right? How about that? And him and I were having a conversation about this the other day. How and I asked him like, hey, if you had to start all over again, like what type of books would you read? And he actually told me, and he's a very well accomplished real estate investor, and he goes, honestly, I would start by reading books about business, just general business, because it's not enough for someone to do deals, but you got to be your own CEO. You have to be your own CFO, your CIO. I mean, HR, right? Like you name it. And that's one of the things I notice that a lot of people kind of struggle with is they know how to do deals, but they don't really know how to build a business on the back of that. So that's what the force strategy is all about. It's all about from A to Z. Let's find it. Okay, great, and then buy it, owner financing, or raise the capital, and then manage it. Because I think a lot of times people over romanticize the acquisition of a piece of real estate, but never the execution of a business plan. So, I mean, I'm a lifelong martial artist. I love martial arts. I'm a huge UFC fan. And one of the things my wrestling coaches would tell me is like, because he used to teach me using business, because he always knew I was interested in entrepreneurship and business. He goes, buying a business or buying a piece of real estate, it's like, it's like a takedown. You can have a great takedown. You could do a blast double, and they're flat on their back. You got great positioning. But what you do with it afterwards is more important than even getting the takedown. If you can't record damage, then you can actually get submitted, right? Like with the person being on their back. And so that's what cash flow is all about, the management portion. And then of course, how do you build off of that momentum and actually build a business around that piece of real estate? So that's the force strategy, Clint.
Nice. It's something that we teach as well in our events is that real estate investors need to treat their investing like a business
Yeah.
and focus on the high value work that's going to make you money and not so much on the low value work, because you see a lot of investors get caught up in doing things that they shouldn't be doing on their own, like their own books and tax returns, setting up their entities. And to some extent, it's the rehab of the property themselves. I mean, if you're out there finding deals, do you need to be out there holding a hammer and retexturing, repainting the interior, or are you better off finding that next deal and hiring that out? And sometimes people get in their way because they don't see it as a business. They see themselves as an investor and they become trapped and they're unable to scale. So when they hear your story, 87 doors within a year, oh, that's impossible. Not if you have the right systems in place that will allow you to expand upon your talents, like you were obviously able to do. And I think that's key. And so many people don't teach that. Like you said, what you're doing is teaching that other side to understand it from that perspective. So,
Yeah.
that's really, really important.
Yeah,
Sure.
I would agree.
What are your thoughts on the market now?
Yeah. Obviously, um, one of the things I've done to really understand, I've been blessed, and my mentor he's pushing 75 now, and he's seen four different market corrections in his life. So, I'm 27 years old. I've never, been an active entrepreneur, an active investor during a market crash. I wish I would have, I mean, like if I would have gone back and told, in 2000, let's see, 2008, I was 14 at the time. I think I was a freshman in high school. I'm really mad at my freshman high school self that I didn't buy properties at the time. Instead I was busy, you know, playing basketball, right? That's like,
Yep.
but one of the things I think about the market now is I follow a lot of different channels. I like to read a lot of books and a lot of reports on what's happening. And for me, I get very nervous. I have a couple of friends of mine who are pretty high up in national mortgage companies, and one of the things that they've been telling me is, they get really nervous at the fact that a lot of their mortgages, actually, the appraisal value is starting to be lower than the loan amount and the loan balance. And one of the things that I've been hearing from them, because as much as I love media outlets, I'm not really big on following, media
Mhm.
like CNN or Fox. I don't really watch them. I'd much rather get my data from the actual source itself, right? Which is the people working in the industry day to day. And one of the things that I'm hearing kind of all across the board is, a lot of these mortgages starting to be underwater. A lot of loan to value ratios starting to go above 100%. I met a mortgage guy the other day where, they were doing apartment buildings. They were doing commercial loans for apartment buildings for 3 years now. They've been doing them on stated income. So it just, it makes me really, really scratch my head / nervous. I think a lot of investors today are buying properties based on speculations of rents continuing to rise. And obviously that's been built, the rent bubble, as I'll call it, right? The increase in rent has really been built on the back of a housing market that's priced out a lot of tenants, right? From entering the housing market. I'm one of those guys who believe that we've had a very much of a false lack of inventory in the housing market. If you look at government intervention, if you look at programs because of the pandemic of stuff like the foreclosure moratorium, that's kept millions of homes from re-entering inventory. And I'm also paying attention to a lot of these canceled contracts that are happening within the single family industry in states like Texas and Arizona. So, I think inventory eventually in the next coming years, potentially in the next 9 months, will continue to balance itself out. I think personally that rising rates are going to decrease strength in the home buying pool, because really that's my generation, right? The millennials, like we're the ones now. We are the primary home buyers now. I think that the age range of the millennial now is what, like 26 to 41 or something like that. Um, we are the prime home buyers. Like we are the ones that like a lot of people are looking to sell their home to. So, you know, um, I don't think the liquidity and the financial strength of millennials is as strong as a lot of these home builders think it is. So, for that reason, I don't think rent is going to continue to skyrocket as it has. If anything, I think it's going to go down. Um, because a lot of these individuals a lot of the millennials who've been waiting in the sidelines to enter the housing market, who are going to start going into. And obviously, when that happens, the first individuals in the tenant pool that tend to leave are Class A tenants. They're
Mhm.
typically the first ones that tend to enter the housing market, and then who knows what we'll see. But All I know is we've seen a lot of Class A apartments being built the last 2, 3 years.
Oh yeah, they're throwing them up all over the place. I was just down in Austin last year, and I just couldn't believe how many apartment buildings were going up as we were driving around because my daughter was considering moving there with her boyfriend.
Mm.
And I was thinking the same thing is that, once this starts to settle down, you have more people, more supply out there. The rents that they think they're going to get off of these deals, what they're financed on, it's not going to materialize
Yeah.
because once you have more supply in the market, it's going to drive that back down, especially homes, or people are moving in and buying the properties that, as you said, that shadow inventory that's been locked up there. There's so many factors. And then you've got the rent moratoriums that a lot of cities in the blue states have imposed upon landlords that, how does that factor in once those kick in and they can start charging the full rents again like they intended to. So you got to be careful. That's why I personally think single family, I've always liked it.
Yeah.
Older single family homes, even though your capex can be a little higher, but know your market, what your tenants expect, and go from there.
Yeah. I mean, even in my home state of Illinois, Illinois is not necessarily the number one destination for people wanting to move. I think we're
Mhm.
actually number two in people moving out. But yet, even if you were to draw where I live and you did a 10 minute radius, like a 10-minute drive radius, they're building about 3,400 units. And they're all Class A, and a lot of the feasibility studies that I know that these developers have made their decisions on is predicated on a continued rise in rent. I mean, like I have a buddy of mine who's now my business partner who was responsible for a 364 unit development, and they're charging $3,600 for a 3 bedroom, and even at that price point, their margins are pretty slim, and I don't know how much of it is sustainable, So I mean, even like, and there's an interesting parallel, right? Because even looking at the stock market, I mean, like, gosh, like what percentage of companies in the S&P 500 actually make money? I think the statistic that I saw was like 40% are actually currently losing money. Um,
Yeah.
and so,
That's
like, I mean, it's just been propped up by false predicate, like, just kind of false value, in my opinion, So, yeah, it'll be really interesting to see because I know a lot of people are building Class A all across the country. I mean, even in my home state where people are leaving, and I just don't know if I'm very confident in that investment strategy right now. Well,
So I'm sorry, catch up with something
yeah,
else.
yeah, yeah. No, the last thing I was gonna say is, what we're looking for our partnership is we won't buy anything unless there's intrinsic value,
Hmm.
unless there's earned appreciation, and and not or and the cash flow right now, right, as it is, the income as it is sustainable, to give us a pretty good rate of return for our investors. So we won't even touch a deal unless we can have intrinsic value and the deal works as it stands right now, even if the rents weren't aren't able to be raised.
That's exactly right. And that's where you get into trouble when you think you're going to
Yeah.
make it on the come side of that bet and it's going to pay off. And I was wondering about this just the other day. I was talking. So my daughter and boyfriend ended up living in Denver, and
Nice.
Class A apartment building, moved in. It had only been open for about 6 months, and they I thought it was fairly high rent what they're asking for a one bedroom. Well, 5 months ago, when those initial tenants came in, when they came up for renewal, they almost doubled their rent on them. And so they started, and then you started this mass exodus out of the building. And so my daughter assumed the same thing that they were going to double her rent. And when she went down to talk to them because they're coming up on their year, they said, "Oh, no, 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 we're going to raise your rent $40." And she said, "But I thought," they go, "Oh, we're not, no, we're no longer doing that." So I know it's an isolated occurrence, but they're starting to see that you just can't
Yeah.
demand that from people because there's more inventory out there. There's more options for them. And so that's going to be hard to make their numbers work, I think, for this particular property, if that's what they did when they financed it.
Yeah, and even so, my wife and I, we went from living in a 4 bedroom house to renting. So that we actually
Hmm.
moved from a 4 bedroom house to renting in 2020, like right in the beginning, before everything happened, right? And right now for a 3 bedroom 2 bath, which we actually, between her and I, we actually enjoyed renting more. But we're currently paying 22 right now for our 3.2, and we got notice that they're raising it to 3,400. And that actually is what prompted us to like move to a townhouse that we're moving to now. So it's just, and like they're losing really strong tenants, right? Because like, could we afford that? Sure, but I mean, at that point, it's just stupid to stay.
Yep.
Like why would we do that? Like our mortgage payment between taxes, insurance, like everything, PITI is 2,600, right? For the place that we're buying. So again, to your point, like I'm just seeing a lot of offering memorandums where people are making the assumption that the cap rate is actually going to be lower 5-7 years from now in their exit than it is today, and I'm kind of just going, I don't know if that's going to happen. I don't know. I just don't see that data.
Yeah. So find your market and figure it out and make those investments. Well, hey, it's been a great interview.
Thank you.
Um, you've got a ton of resources. So is there anywhere that people are watching, if they want to learn more on how you train, the way you look at evaluating properties, where they should go?
Yeah, so we actually have a free real estate course. So I think it's about 40 to 50 hours worth of content. And my brother and I have recorded everything from like a mini raising capital course. I have free meetups that talk about that. So really, if you just go to the kwakbrothers.com/free stuff, or even if you just go to the kwakbrothers.com, there's a tab in there that says free stuff. And I mean, all the way at the bottom, it's called Base Camp, and that's the free course. I have a free book that they can get. We have a free meetup every other Tuesday, first and third Tuesday of the month. And even if people just want to say hi, I gotten in a lot of trouble for doing this, but I like to give out my personal email address. So even if people just want to say hi, to say what's up, hey,
Yeah.
hope everything's doing well, or share some really crazy real estate stories, then my email is just daniel@thekwakbrothers.com.
Perfect.
So I
Well,
love
we'll
people.
have that information in the show notes as well, so
Awesome.
they can just click on it and it'll bring them there. But it's been great having you on. I mean, this
Thank you.
time went so fast. You have such an interesting story, and the insight I think that people glean from this is our bold strategy, right?
That's
And
right.
how to go out there and
That's
do it.
right.
Yeah. Anything else you want to say in passing?
No, I actually this was and I hope this is recorded and I hope people listen to this part. But I do a lot of these podcasts, and this is probably one of the ones I've enjoyed. One of the ones I enjoyed the most. So this is really cool. It's very like usually other podcasts I do is very structured and very like for me, I just like it to be kind of go with the flow, because
Yep.
really even as a real estate entrepreneur and an entrepreneur in general, you kind of have to be go with the flow. You have to adapt and you have to kind of make pivots. So I really enjoyed this podcast. I hope more people subscribe and listen to this.
Great. Thanks, Daniel. Good talking to you.
See you, Clint.